Today marks the 84th day that Bitcoin has remained under the old all-time high of $74,000. However, the stakes are rising. More money is flowing into the ETFs and new all-time highs are forming on the stock market. So pressure is building for these markets to continue higher. However, the big short is also building. So in this video, let's look at how the big short is building, what to look out for as a new investor, as these are the times that get very tricky moving forward into the bull markets for traders and investors. Make sure you hit that like button. Let's go for 3,500 on today's video. And of course, subscribe to the channel if you haven't already. You're joining myself, Jason Pizzino, at your home of macro cycle analysis. We're covering Bitcoin, the stock markets, crypto, of course, and the real estate cycle. All right, guys, if you haven't already, links in the video description for our free crypto and economic report. And for the Aussies, get on board before the markets heat up. Your exchanges, your crypto exchanges, SwiftX, free $20, link in the video description. All right, let's start it out with Bitcoin for today before we get into the big short and how that is all unfolding and how long that could potentially go on for. And you don't want to get wrecked in a big short, as the Big Short movie glorifies being short in the markets while they are going up. A very difficult game to play. So let's start out with Bitcoin, and the current price action is at 71,000. Same price it was about 84 days ago, so nearly 3 months. As a reminder, when that top came in and the signal, the 3-day down signal came about, we said that the market would probably be down longer than the majority could handle. And that has now been the case. I was looking around 4 to 6 months, cut me some slack. It turns out it's probably going to be around 3 months underneath the old all-time high. I think that's still a pretty good signal that we can all use if it shows up again near some tops. So write that one down in your trading journal, looking at the 3-day down signal from extreme tops. And that can also be used in reverse at bottoms. We had a 3-day up signal from this low here that bounced off the 50%. If I can't say it myself, amazing trading rules from Gann. 50% rules. We've got our Gann swing indicator, and Michael came up with the back testing on the 3-day down signal. Okay, so these are the things that help us navigate the markets. Now we're at 71,000 and a couple of days up here. We haven't still broken this top from the 21st of May, which is at nearly 72,000. So ideally, as I said in yesterday's video, you want to see some closes above that 72K level, because as it stands, Bitcoin has struggled to close daily closes above that 72K level. So that's the next price target for Bitcoin to overcome and get some daily closes above that level. Now, if it doesn't occur, and for whatever reason, this is still the top here at 72, the 50% level to the downside remains at 64K, or if you want to use the all-time high, it's at 65. So roughly around that mid $60,000 level, for any sort of correction, price is still in a strong position. So on this grind over the last few weeks now, coming back to the 18th or 19th of May when it first hit 67 again, basically the price has been in a tighter trading range of 66 to 72. So not much to really be said unless you get a breakdown or you get some closes above $72,000. So Bitcoin looking relatively okay here. As for the Bitcoin ETFs, there is a lot of talk about that today, as it has been the 4th highest. So it's good to see that we're seeing more money come back into the space, but the market sentiment is not as ridiculous as it was in March. So we're just tracking the ETF flows, but of course the major point here is to continue to follow the chart in case you do see any sort of corrections or consolidations above $72,000. So either way, I'm not going to take away from it. It's a good result to see this being in the top 5 highest daily inflows for the ETF. Now, as for the Big Short, if you haven't seen the movie, go and watch it a few times. Steve Carell's character is based on this guy here. This guy is Steve Eisman. I suspect you're going to see his face pop up a lot more over the next 1 to 2 years. You guys probably know that I love to do some predictions and forecasts, and I think his face is going to be popping up. Why? Well, he is very bullish on the markets. And I think as we get into the peak of the real estate cycle, the peak of the stock markets over the coming years, you're going to see more bullish faces surface rather than bearish faces and bearish calls. And that is a sign that we're getting towards the top. Now, there's nothing against his trading or investing. I have no idea what he's doing. The main thing is he's been bullish since the lows, and he's been making a shit ton of money, as opposed to all these bearish people who keep putting out bearish calls every year, basing it on different data points in the economy and all this sort of jargon to tell us that the economy should have been collapsing. If you've only been around in the investment space for the last 1 or 2 years, what you're seeing with the bearish news that you hear day in, day out has been going on for decades and decades and decades. Now, in terms of the movie itself, it talks very well about how that short happened. But one thing that isn't talked about so much with Michael Burry, which I think most people know or should know by now, is that he started shorting the housing market in 2005. And the types of products that he was shorting were the credit default swaps, so the CDSs. And this, of course, was also on the stock markets, which eventually collapsed early 2008 and then into that September-October period of 2008. So the big thing, the massive thing to note here is that it was almost a 3-year gap in the big short. That's like shorting around here, watching a bull market run out in your face and then go even faster in your face with more and more gains. And if you're trying to hold a short, like it suggests in the, talks about in the movie, is that it costs them money to continue to hold this short position. Now, I don't know about you, but for the majority of people, they are not going to be able to afford holding a short position that long. And as it's talked about in the movie as well, whether it's true or not, the character here actually locked people's accounts or their investment into his account itself, and so they couldn't withdraw it while the short was happening. So that is another big thing. It's basically he's got all the money in. The investors didn't want to keep shorting the market. He had to lock the money there so that the position could ride out and then finally happen. So he was dead wrong on the timing, dead right on that the market was going to collapse. But if you get the timing wrong, you're essentially wrong on the entire trade. But in this case, he had people's money, locked it up, waited for the thing to eventually happen, continued to pay out, luckily had enough left to pay out the premiums on the options and the CDSs that he had, and then eventually it went in his favor. So there was all sorts of manipulation at the time as well. That's every single market, every single time. It doesn't matter what you're looking at, real estate, stock markets, crypto, Bitcoin, there's manipulation all the time. So we can't just keep blaming manipulation. There's manipulation on the short side, there's manipulation on the long side. So get over it. That's what happens. The main point I'm talking about here is how long this short went on for. So if we start to think about shorting these markets, be very, very careful with how long they can continue to the upside, which is this next piece of data here. Bear markets are rising in big tech. So the NASDAQ 100 recently closed at new highs. We got that today. More stocks in the index were falling 20% from their highs. So that's the bear markets there. There's a severe divergence between the index and its component stocks, last seen in late 2021, which of course was the peak in the stock markets, the previous peak. Outside 1998 and 1999, the internet bubble blow-off, similar divergences preceded weak returns over the next few months. Okay, so what we're looking at here is this signal for the NASDAQ 100 after 52-week highs with greater than 13% or more stocks in a bear market. Basically, call it 87% are going up, 13% are going down or more. Okay, so it could be less than 87% going up. And you're starting to see more of these stocks go into bear markets. Two major things to note here from what I can see from my experience. With bear markets, technical bear markets is what they are referring to. So that's a drop from their highs of 20% or more. This can happen very, very easily in lower cap stocks, especially in tech. I think you and I both know that happens very often in altcoins. You see more than 20% drop, and then all of a sudden you see them putting in higher lows, and then they start to break to new highs. And I've got that coming up actually with the altcoin market cap as well. So we've continued to cover altcoins that have corrected and then have continued to climb out. So that can happen quite easily with this particular signal, but it does precede big moves, and you can see that it happens near these little peaks, and there are some corrections, and that's exactly what the data is suggesting, that in the shorter term, so I'm looking at this as being the shorter term, 1 week to 3-ish months, the results aren't that great. You wouldn't be wanting to bet on those type of results to give you a positive move to the upside. It can still happen 6 out of 10 times that it moves higher. 4 out of 10 times it's a loss. There you go, 7, 7, 6, and 6 times. Okay, so it's still on the side of a positive move, but there is more chance of it going against you, so going south in that period. So that's what that table is showing here. But the big thing to look at during the final blow-off phase of the rally, divergences galore occurred and the index continued to soar for months on end. Where are we in the cycle? This is where I think we are. The winner's curse phase, we are in that now. It's about 2 years of this winner's curse moving to the upside. So if we're in that phase, this could be the months on end that this signal keeps coming up, that you're seeing this bearish divergence. The majority of the stocks in the top 100 aren't hitting new fresh highs, but the top few or top couple of dozen are still hitting new fresh highs because they are the major market caps of the NASDAQ 100. Therefore, the NASDAQ 100 is going to continue to hit new all-time highs in the face of this bearish divergence signal where the majority aren't going up. And I put heavy emphasis on this particular signal because this is what we were seeing back last year in 2023, where you had the NASDAQ rising and the majority of stocks weren't. It was a big headline at the time. So if you weren't following then, don't worry, I'll speed you up to date now. And basically this was one of my posts from back then, almost a year to date. That was 2nd of June 2023. Remember, we're now June 2024. And so at the time, I was just making daily posts about how these markets continued to go higher, putting in fresh highs back in June. That was here. This is the tweet back there. And these are the lows at the time breaking out. Like, it's a simple looking pattern now, but at the time it was so hard to convince anyone that this market was going higher, which is exactly what you want to see at lows. And the flip side is going to occur at the tops. It's going to be hard to convince people that we're near a top when those tops are coming in. Just look back to what happened with Bitcoin in March. I'm not saying that this is going to be the final top, but it's the same market sentiment around those tops. And if you want to grow and develop as a trader and investor, remember these times, remember history, and see how the masses were playing it through these particular peaks. Like it was just impossible for the market to go down because of these ETF inflows, and some other BS will come back this time round. Not to say that they don't work, like that obviously people buying ETFs or Bitcoin ETFs is not going to make the market rise. Of course it is, but it's the belief that it can't change. That's what happens at these peaks. People are always going to be buying. BlackRock's always going to be buying. BlackRock will never let it happen. It's the same shit that happened last cycle. They'll never let it fall this far. And of course, well, they were all wrong. So what I've covered is a mixture of the data itself. That's just the pure numbers. When this signal comes up, it can show that the market will correct. But when will that happen? Well, if we look at the last blow-off top in 98, 99 into 2000 for the dot-com bubble, well, that took a couple of years. And that could be well and truly in line with the winner's curse phase here. So again, there's more and more data here looking at it and how the signals, you could basically see a 94% hit rate 12 months later after this signal that the market's going to continue higher and higher and higher. Eventually 6% of the time it's not. I'm just going to fast forward to the end here, looking at the research itself. We can see that again here with the increase in stocks falling into bear markets. This is not typical behavior when an index is reaching new highs, and has caused concern over the last 20 years. The late bubble years, however, were a short seller's nightmare because nothing mattered for more than a year and double-digit returns, so bulls have to hope that the AI hype continues. So this period is going to be a short seller's nightmare, which is why I bring up the big short here. Look at that. That is an absolute nightmare. Imagine living through 3 years of the market going against you with, I think he had a position of, I want to say 800 billion. 800 million. I know he made over $1 billion in the trade, but you have hundreds of millions, let's leave it at that, on the trade for several years, and it's going against you the entire time. This is going to be a short seller's nightmare, and this is going to be a bull seller's or a long trader's worst enemy as well as we lead further into the peak. This is the hardest part. The bull markets are always the hardest part from my experience. So that's my level-headed warning for you guys today. It's a tough game out there. It's not an easy game. Trading, investing is not an easy game. It's not just a set your price and you're going to win. You can come back in a year's time and you're going to have all the money in the world. So let's have a look at some of the cycles before we get on to the cryptocurrencies. Checking out the S&P 500 cycle composite for 2024, just basically how we are tracking. This one was posted up by Seth, good friend here, 5th of February, 4 months ago. It says you are here. And looking back on it now, 4 months, 4 months later, we're in June. You can see we did do something like that leading up into those peaks. The peak was April, so we had a correction. It came back in May, put a new high, corrected again in May, and then pushed back to a new high now in early June. So although it wasn't exactly like this, because we're not expecting it to be, it's 95 years of data. We did, however, see a pretty reasonable correction into that April-May period we saw 7% on the S&P and the NASDAQ. So it's bounced back now to new fresh highs, but it's not going to be easy. There are very significant corrections along the way this year. But if you just bought in May and then came back at the end of the year, did not look at the chart, closed your eyes for 7 months, you're probably going to be higher. Probably going to be higher. That's all it is. There's going to be tough moves along the way. Now, on top of that, this one here is also an interesting one because this is the 4th year of the decade, so the Dow Jones 10-year cycle. This goes back to 1897. 123 years of history. Within that 123 years, you probably have about 10 years of data with the years ending in 4. 1904, 1914, 1924, 34, 44, you get the picture. This is typically what those years look like. And so far, that's kind of been what we are seeing for, remember, this is the Dow Jones, not the S&P, and you're seeing moves higher into fresh highs and then corrections and then moves higher and then corrections. So overall, it's an up year when you look at the open to the close, but it's not an easy ride to get there because the third year was the easy ride. The 2003 was the easy ride. That ride didn't feel like it, but you had a much, much bigger return there than so far from what we've seen here, 48 to 53. Basically started out at somewhere here at 39 and ended somewhere around 48. So far, 2024 has been a little bit more of a tough ride. But looking at 2000, or in the 5th year, this is what the decade cycle shows. That is phenomenal, especially if you relate it to the winner's curse here. So I'm still expecting 2025 to be extreme. But we have signs, as I said, for the bears to start thinking about big short positions, which is why I'm warning of the big short and how this can destroy a lot of traders in the face of a major, major bull market blow off top. It can go on for much longer than the masses expect. And this is what we're looking for with the everything bubble. So that's what we've seen with the S&P today, new all-time high. The NASDAQ, new all-time high. Again, 19,000 points for the first time in history on the NDX and the NQ1. Did we get there? We had a couple of days or 1 day of 19,000 points and now 19,000 points again. We actually got a close in the 19,000 points. Now this is being led, I think most of us know by now, with NVIDIA. NVIDIA, again, smashing new all-time high records. Too bad if you were shorting this thing all the way up. That's why you do not want to be shorting major bull markets. Definitely know your cycles. A lot of people we know out there, these pro traders, master traders, verified traders, you know who I'm talking about, continuing to short these markets, just ridiculous. Just follow the trend. The trend is your friend, and the best trend indicator that I know of is the Gann swing indicator. These green and red areas are basically buy and sell zones just based on some simple swing analysis where you could enter, have your stops in play, and then ride it until the end of the trend where the swing turns down. Now, the first one out of the breakout to start your campaign here for NVIDIA, but you can use this across Bitcoin, you can use it across altcoins, especially as they break out into new all-time highs, which we are seeing with some altcoins now. So the Gann swing indicator is in the top of the video description here, 7-day free trial. Check that out. And there's a few videos on how to use it. But this is simply how you could see the profits continue to mount on top of each other using the swing. So the first trade through here is 11.6 to 1 returns. The next swing trade, and there's plenty of them through this particular run all the way up. You got another one here at 7.6 to 1. So big returns there. You've got a few losses because there's nothing that guarantees. But if you were to take the exercise and go through the entire move from the breakout, there are very, very big returns. And this last one at the moment is sitting again at about a 7.6 to 1 ratio. So for every $1 that you bet down here, $7 return. So if you had $1,000, it's a $7,000 return using proper risk management with simple strategies to buy and sell. And of course, what you guys are probably interested in are altcoins. This was a post from coming up to 2 months ago now, 19th of April. Higher lows look to be forming on strong altcoins. And that was the situation. There is the 19th of April. There is your bottom, the death of crypto. There's been a stealth move out of those lows. And some of these altcoins have actually been touching new all-time highs. We saw TON yesterday hit a new fresh high. There is TON, bit of a reversal today, but essentially there is a support. May 1st, you've got high lows on the 50% and just to ride that thing out there. CAS, I think, has also been doing relatively well, hitting new fresh highs, but do note, these are not buy signals now. They're just looking at strong altcoins for any sort of corrections on those because they bounced off 50% and broke through their next 50% and been hitting new fresh highs while some of the others have been going lower. And one in particular, it's so easy to pick on. It's its third straight day lower. That's your XRP. That broke through that low, 1 day, 2 day, 3 day, potentially going to go into our 4th day of lower lows against BTC and maybe put in a new fresh 3-year low. Anyway, you don't want to be trading the losers, you want to be trading the winners. And BNB has also been another major winner on the US dollar pairing here. So it's pushed to new fresh highs, hit $700 for, I think it's the first time in its history. So yeah, just got to $700 in the last 24 hours. And of course, for the Solana players, you got Solana that also was putting in at least equal lows to that 13th of April low. So strong altcoins, as we talked about here. Look for higher lows on strong altcoins. There you go. And then higher lows above 50%. And again, it's attempting to put in another higher low here and start to ride higher. That's the stuff that you want to be looking for in your portfolios as the market heads higher. If you want to know and learn how to implement trading strategies, I suggest checking out TIA Gann Swing Indicator, which you can find a link to in the video description. And of course, learn the trading strategies themselves with TIA Premium. Other than that, I wish you a fantastic day, guys. And I'll see you back here at the next video. Stay safe out there. The bull market does get crazy and the volatility can be relentless. Big swings are coming up, big emotions. Stay tuned, like and subscribe. See you back here at the next video. Peace out.